Welcome back to Old Guy REI. In this latest episode of Meet the Investor, I'm really excited to be talking to a new friend, someone that I just met last week. In fact, Ashley Pereira is also in California. So thank you, Ashley, for taking the time to meet with me this morning and share your story. And um, hopefully, we'll put it out there. And I know you've already been through some things, even though your journey is fairly new, that can help other investors. And that's what I think I'm most excited about is helping new people get started, and especially when they're willing to share what they've been through so far. I think that's where most of the people in our group could use the help is when they're just starting out. So maybe you could let us know where you're from and what you're investing in.
So I'm living currently in the Bay Area in California. I cannot invest in this area with my current skill sets, which is very newbie level real estate. I will emphasize that a lot. I have no prior like contracting or real estate experience. I come from a totally different field. I'm right now in the field of biotech, and it is incredibly volatile. So for the last couple of years, I have been looking for ways to just shore up my finances and make sure that however the winds turn, that financially I'm still doing okay. And then especially events post 2020, I had just realized the impact of inflation on my financial future. And I really hadn't considered it so much before then. And real estate just became one of those strategies that looked really strong for hedging against inflation and just kind of having more of a stronger financial foundation. So I kind of began exploring like early 2022 is really when real estate went on my radar. And I entered it with very, very baby steps. So first, I just try to get as much understanding of all these different like terms and acronyms and vocabulary as I could. I went to Bigger Pockets for a very short time. However, their teaching style didn't really appeal to me at that moment. And when I encountered on YouTube Dion, that's when I was like, okay, terminology makes sense, strategy makes sense. Why he doesn't do things makes sense. And I started off really wanting to do his method, but out of state. However, the multi-unit area where I decided to invest, which was Rochester, New York, didn't really make sense cash flow wise for what I was comfortable entering into. So during, I think from like 2022 to 2024, I was really just looking for a place that matched um, my expectations for my first property, that matched my skill level, and that was still going to hit certain points that I felt was important for me to feel secure in going into real estate. So just like Dion says, a location has like multiple economic drivers. So at first, while kind of just learning real estate stuff, I was looking at cities that all had universities. And of those cities, universities, how many had teaching hospitals? How many had like hospitals that students had to physically be at, could not just go to remote learning. They had to physically be there. And in addition to that, they had strong other economic drivers. So other kind of like I wouldn't say like foolproof companies, but companies that have been there for quite some time that don't look like they'll be easily replaced by new technology, and that I could see that they had like a strong way of supporting the local economy. So for me, Rochester hit a lot of those marks. And then I was also very concerned about tornadoes and hurricanes and losing your whole roof in one bad storm. I didn't like hearing any of those stories. I didn't feel comfortable going into any of those areas. I think I saw something on Bigger Pockets about this poor guy who bought one of his first properties and he was like, yeah, a sinkhole took it. No, absolutely not. That is not for me. So the Finger Lakes region is pretty mild for like weather and climate issues. So that was another of like, okay, yeah, Rochester looks great. However, cash flowing for Rochester at the level that I wanted to enter into, which was very rehab light, turnkey. I wanted my first investment to be relatively safe. I wasn't finding within the price range I was looking for duplexes or single families with an ADU that met that criteria. So I started off just doing a lot of homework, spending a lot of my free time on very random websites, just refining my buy box. So when I say like random websites, I really mean like Section 8 HUD list. And that really helped to get like a sense of the neighborhoods I wanted to zero in on. And then I also spent quite some time kind of just looking at the areas to stay out of. And my property manager also really helped me with that too. So when I was looking at all these areas, I was also talking to some of the property managers around there and just seeing who would be a good fit for me.
That's awesome. It sounds like you did a lot more research than a lot of us do in the beginning. And you mentioned, being able to feel like secure in your decision. Do you, a lot of us talk about how the education really begins after you purchase your first property, no matter how much you research and um, check into the areas and all that kind of thing beforehand. But were there any, well, let me go back for a minute. You mentioned New York, and I was just wondering, how did you end up in New York? And how many other cities were you looking at the time?
So I was looking at about five different cities, and I initially was like, no, New York. The landlord tenant laws look awful. Um, just the standards that most property managers have. I'm like, how do you find tenants when you have this like very strict criteria like sometimes three times income, really good credit scores? I'm like, how do you find people? Uh, it did not seem like a very friendly environment. However, the low entry uh, point for getting like a turnkey is really hard to beat. Rochester, New York has some excellent prices for a very beginner investor. And also once I started like looking into my buy box a lot better and really just spending a lot of time with that buy box, um, it became just the skills really tilted into that favor because I was also really looking at Cleveland, Ohio for a very long time because I also have a low barrier to entry and parts of Michigan. But what cinched it was my property manager. Just seeing that we aligned on a lot of things that we were, a lot of points that I felt like was important for me. So I want in my property management someone who is a very clear communicator, who treats all their clients with respect, who is has a very quick response rate for me, and who's very up to date on technology. And my property manager hit all those tick marks. He also just has a lot of experience within Rochester, and he wasn't pressuring me to buy quickly. He was pressuring me to buy correctly. So there was a lot of just like inside information I got from his like 20, 30 years of experience. And even though I had spoken to other property managers in other areas, they were a little more hands off with their advice. They were kind of more like, do your own thing. And he just gave me so much to work with that I felt more comfortable moving on in Rochester. And then uh, when I really concentrated on refining where I would be investing within the city of Rochester, it also reinforced that this was a particularly good direction for me because I am a very cautious person. And there are some areas of my life, especially financially, where I'm extremely risk adverse. So I I had a set idea of what I wanted for my first couple properties, and for like counter to a lot of real estate advice, my top priority is not really cash flow. I'd like to build the cash flow later, but for my first couple properties, or maybe just this first one, I want more of an appreciation play because I think Coach Carson probably first mentioned this, or maybe somebody else, but I think it was him, that a good strategy later on can be to sell one of your properties and to sell that property to increase your cash flow. So I was thinking from a 10-point journey, a 10-year journey, at what point do I want to play kind of like certain cards? And if later down the line I would want to sell one of my properties, I would need to have a very sellable property. And probably the easiest time to acquire that property would be earlier on in my journey, like year one, where that property would be way too expensive to get later. And while I hope to get like many really good deals, it kind of seemed safer to buy for appreciation, safer to be in a turnkey situation. And then with the property manager I found, I felt like I had a lot of the knowledge base already there. And then I also spent quite a bit of time talking to different real estate agents and kind of getting a sense of the Rochester market. And it was pretty competitive when I started entering in 2024. So that told me that one, a lot of people that are there want to stay there and are trying to buy homes there. And two, I probably have quite a bit of out of state competition and they are driving up some of the prices. They are also helping with appreciation. So for me, that reinforced like, this is a good area to buy and to buy now. And then I also did quite a bit to help me take that first step into actually buying a property. So I probably did not just too much research and looked way too much into the weeds, but I think looking back, I was also very like fiscally conservative because one of the other things of looking at bigger pockets and looking at these online forums is you see a lot of people who are reaching out because they're in a tough position. And there was like a lot of common threads that I was seeing of being in that tough position, not having enough reserves, having an HOA, not really understanding what that HOA means, whether it means that there's going to be fees that you didn't expect, or that there's going to be limitations to how you can use your property, how you can change your property, and then also um, their property management, not giving them a realistic timeline of when it'll be rented, what maintenance fees might look like. And it was just a lot of themes of people not really digging into the information before jumping in and also just circumstance. And for me, I was like, okay, for circumstance, I'll just save money, you know? Um, so I went to my first deal with a lot more reserves, with very realistic expectations. Um, and there was also some kind of like unorthodox things I did that people probably would not highly recommend because I had a lot of conversations with real estate agents. And for them, I think I spoke to like three or four of them who were all saying, you can get asking, but there's very low chances of getting what you want, like a turnkey below asking. And I was like, okay, I thought about it. And then I was just like watching listings on like Zillow, Redfin. And I was saying, the ones that sold were 10 to 15 grand above asking. So issue with that is also the speed that they were selling at. It is too quick to really get an inspector there on time. So you would see something listed sometimes and then they'd be gone the next week. Or you'd follow up and they'd be like, oh, we already have pending sale. So I knew that I might not be able to get an inspection done. And I did not for this first property. I went in there with only my real estate agent's video and a spec sheet that she sent me. So I had an idea of like how old the water boiler was, how old their windows were, how old the roof was. But I was confident with making that offer because I knew that if my property management came in and said like, hey, this needs to be replaced, that needs to be replaced, I already had it. I didn't have to like wait on getting a tenant in, like building up reserves. I already had it, and that made me feel okay with not doing inspection.
That's a lot of great information. And I think, like sometimes you and I were just talking about how someone might go through something like you just mentioned, not having an inspection done, um, and not really wanting to put that out there in the world because you think it might have been a mistake. But I appreciate you mentioning it because a lot of people, a lot of beginners don't know uh, how to get started. Earlier, you mentioned being cautious, and that's a good thing. But you didn't let it hold you back, right? You decided you were going to buy something. You decided it was going to be more of an appreciation play, like you mentioned, um, and that could end up being a really smart thing because in the future, if you need to sell or 1031, you'll have a really nice property on your hand, and I'm sure you're going to maintain it over the years. You've had it about a year now, right? Which is another thing that a lot of us, once we get that first one under our belt, we just go nuts and just keep buying, buying, buying. And I like the way you're doing it. You're letting it stabilize and, figuring things out because there are going to be issues or not issues necessarily, but things that come up that maybe you didn't see, that you didn't expect. And since you have reserves, it's not going to knock you out of the game right after your first purchase. Um, and I believe you mentioned this one was a single family residence. And that's another positive, I think, because if you do ever need to sell it, single family seem to be easier to sell. If it's a 3 or 4 unit, typically it would be another investor wanting to buy it, and they're going to want to try to get the best price from you as they can. So that might make it a little bit more difficult. Um, would you say that this property was what they would call a home run for you?
Oh, I don't know. I don't know. So I bought it for 140K. I have about 360 per month of property taxes and insurance, and it's rented out for 1,800. So I have about 650-ish for cash flow. However, if we take into account about 10% for maintenance, 5% for vacancy, my cash flow is more like 300. So it's definitely cash flow positive. I don't know if it's like a home run, but it's in that direction. And I didn't wait for the rates to go down. My interest rate is 7.45. So, and maybe they will come down in our lifetime. Maybe they will, but even if they won't, I could always pay just the mortgage down later and increase cash flow that way. Or, and I'm not at this stage in the game at the moment whatsoever, but if I no longer had my W-2, I probably would want to take over management if I have the time. And hopefully, like, for me, real estate is also buying time freedom. So that's a lovely thought for like 10 or so years because I do know that there's a couple of really successful strategies out there for doing property management at a distance. And I think Becky Nova has a really great channel, Lady Landlords. I think April Crossley also covers this extensively. Of, you build your systems and there's a lot of different approaches. But if I have these numbers now with property management, then my yield will be a lot better if I take over at some point in the future. So that's an option.
Yeah, that's a good point too. And that is something that you can explore over time. Um, we do have property management for our properties, and it's 10%. So once you get a few more doors, say you get up to 10, that could be a fairly large chunk. But I think also in our previous conversation, you mentioned you haven't seen your property in person yet, and in our community, I was surprised at how many people have not. Sometimes our mentors will tell us, you got to get there. You got to make sure there's actually a building on the lot and what kind of shape it's in, what the neighborhood looks like, and things like that. But Cynthia and I are at 10 doors now, and we haven't seen one of them. We do plan to eventually get out there and see them, but I think you relied heavily, like you said, on your PM video walkthroughs. You seem to have found a really good agent that wasn't rushing you into buying something just so they could make a sale. So you also mentioned you have the one in New York, but you're looking at other markets. What spurred that thought, and why are you thinking of going someplace else?
Because I realize that while I am financially at the point where I can acquire another property, my skill base and my knowledge set isn't quite there unless I only want to stay within this very specific buy box in New York. In that case, I'm very well equipped. But again, it would be a very safe, secure, kind of like cash flow medium acquisition. If I wanted more cash flow and if I wanted to accelerate that timeline of getting to like time freedom, then it looks like from what I've seen at different like Aura Zoom talks, and just kind of dipping my toe back into like what's currently going on in real estate, that there's a lot more cash flow out there for somebody who's willing to take quite a bit more risk. And I think I might be there. I think that knowing what I had to do to make myself feel secure in real estate, which is having my reserves, using conservative numbers, having reserves, and then still expecting to be paying maintenance, those all helped me feel secure. And I think when I go into like a riskier market, I will probably have to do those same kind of strategies to like get myself to take that jump. And I just want to know if it's worth taking that jump. So I have been looking at other areas other than just Rochester, especially because I saw Lindsay Barrientos recent talk with Bigger Pockets about like her cash flow. And then also, I've been attending the ORAT out of state investing groups, and there are a couple people who seem to have much shorter timelines than the whole 10-year journey. And a common theme with them is that they just take more risk. So I don't know. I feel like for my next one, I would like to take some form of risk, even if it's just using like creative financing, even if it's like not using my money and using a private lender or doing like a seller financing deal, something that kind of just like stretches me a little bit so that I don't stay within my comfort zone because I know what that's going to look like. And I would kind of like to explore something different.
Yeah, I think like you mentioned, we're in a couple of markets ourselves that, and you mentioned the age thing. Us being, my wife and I being closer to retirement, we decided to mainly invest for cash flow. And if appreciation happens, that's great. But we wouldn't typically have, 10 or 15 or 20 years for appreciation to kick in to be able to sell stuff later on. So I think when you look at some of those markets, you mentioned Lindsay, she's in Gary. We have people investing in Pittsburgh and Ohio and different places. So if you can find a group there and kind of piggyback off of what they've done already, it'll save you a lot of time. Maybe you can get good resources for PMs and agents that way. But also something that we learned along the way is investing in those kinds of markets. We had to up what we set aside for reserves. You know, I was always around 15% when I was analyzing deals, but in St. Louis, for example, we went up to 20% set aside from the gross rents for reserves for repairs and capex and things like that. Um, but I think if you keep doing it the way you've started and just say, I don't know, you end up in Gary or someplace like that and you buy one and you seem to be patient enough to let that one stabilize for a year and see how it goes, right? Then I think you'll have a lot better knowledge. A lot like Dion, you mentioned Dion, he definitely doesn't recommend doing burrs. Like, Lindsay had a few deals before she started doing burrs. Dion is always like, I wouldn't do it within my first four because things could happen. Might take longer to rehab. Interest rates could change. If you're using hard money or something like that, and it goes too long, then you're paying quite a bit for that. So, um, if you could get something, close to turnkey, then let that sit for a bit and see how it goes. That's a smart way to go. Um, I was wondering too, and I'll get around to the conversation from our Wednesday call in a minute, but do you have, and if it's too personal, you can certainly don't have to answer, but I was just wondering if you have a spouse or a partner that's going through this with you right now.
No,
You're doing it by yourself.
I
The thing I was thinking about, and the other thing I wanted to mention is that I've already seen you jumping in, like you were there on our Wednesday call. It sounds like you already went to some of the other meetings in the school community on the school calendar. But I wanted to thank you again for jumping in because you were asking questions already. You were offering suggestions, and one of the people that we were talking to that night was from a different culture, right? And she was saying that her husband basically in their culture, the male took care of the finances or whatever it might be like that. So she didn't really get involved in that. And but now I think they're not together anymore. And she sounded like she was all in. She's going to go buy something and she's going to make it on her own. And that was really exciting to hear. But I think a lot of us, with the deal that she was looking at, just the questions everybody else asked that they would have asked if they were in her position gave her a lot more insight of things she didn't even consider. So hopefully she'll be able to go out and ask um, some good questions of her agent or whoever was selling that property. Um, and we've also have a lot of friends in the group that are married and maybe their spouse isn't all the way on board. They're like, that's your thing. You go ahead and do it. They don't resist, but they don't really get involved in the process. So there's a big range of support, in couples and things like that. Some of us even talk about, if you're getting into it now and you're not married yet, and you do get married in the future, and you have this portfolio built up, what do you do there? Do you have a prenuptial
We're married.
agreement or something like that? Something to protect what you've built. Not that I don't know. I think a lot of people, when they hear that term,
Prenup.
they don't have good thoughts about it. But it's something important, right? Because just say if you have family that you're planning on leaving your estate to in the future, if that's something you're looking forward to doing, and you get married or somebody gets married and then their spouse ends up taking half because they don't make it. Um, so some crazy things come up after you've been doing this for a little while. Um, I'm pretty safe. My wife tells me she'll just take it all, so I don't have to worry about anything. So, um, getting back to what we were talking about earlier, which of the other meetings have you joined already in school?
So I've done the out of state investing and ladies of Orat. So those are the two. Oh, and then your accountability call.
Hmm.
So I think technically three.
Okay, yeah, I think the Ladies of Orat has a bunch of really great people in it, and I always let them know too. Go ahead. I'm sorry.
Oh, no, 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 no. Yeah, yeah, yeah. Just when you mentioned layers of weird aura, I did think of a couple things too that I would like to mention.
Okay, yeah. Why don't you go ahead before
Oh,
we
okay.
get too far?
So one thing I noticed is there's a really good mix in the layers of aura of people at different skill levels. It does seem that there is a really big range in the kind of people who do invest, and that some people are a little more like shopping spree style when it comes to properties, and then other people are a lot more like me and they're a bit more cautious. And then there are a range of different ways that people kind of do their real estate homework. And I don't know exactly what's the correct way, but for my area, Zillow is a little bit unreliable for rents. I've noticed as big as a like 200 to 400 spread either way, below or above, like what you'll actually get for that property. And I think part of that is unless you are on Trulia, Craigslist, apartments.com, and you're tracking those listings, it can be really easy to just like trust Rentometer, trust Zillow. But I highly recommend that once you have your buy box down and maybe you have like one or two neighborhoods you're looking at, just look at one or two neighborhoods, do a screenshot of this month, like what's being listed, and just track a couple of those properties, maybe just like five properties, and see how long they're actually listed. So even if you have a sense of what, you should be getting in these neighborhoods for your three-bedroom, four-bedroom, whatever, look to see how long they stay up there. Because yeah, you might get that, whatever price range you're looking for. But if it's gonna take you 4 months or 5 months to get somebody in there, like you need to know that information and be prepared for it.
Yeah, and that kind of goes hand in hand with what I was going to say is I think the women investors in this community are very intelligent, and I've learned a lot from just listening to some of the other podcasts that they've been on. I think one of the greatest things that I see is how patient you typically are. I mean, still among the female investors, I think there are some that just want to go after it and go buy, buy, buy. But I
I
think
do.
the percentage is a lot lower than on the male side, because I don't know. For us, it's like, okay, it has a great roof, let's go for it. And you guys are, wait a minute, it's in a D area or whatever it might be. So I appreciate that, and I've learned a lot from you all. Um, you know, I think Jen and one other lady started that group. I haven't. I tease them because I tell them I've tried to get in, but they keep kicking me out. I have to change my name maybe to
On a
and
wig.
change my. We've been trying to different ways to get in, but also I think Lindsay and is part of the out of state investor call, and they have some really great meetings. I watched a few of the recordings over the last few months, and they put out a lot of good information. So I think you have to pick what's best for you, right? You know that you're not the kind to rush in and do something silly. So I think you're going to be just fine. Some other people in the group, since they've joined the group, are like, oh, you know, Frank's in St. Louis or Mikey's in Pittsburgh, and so they're going to all these places. You know, there's Lindsay's in Gary, so I watch that and hope that they don't make mistakes by jumping all over. I wouldn't say we get criticized, but you know, some people wonder how are you in four different states and you're still making it work. But you mentioned property managers earlier, and managing property managers now is the name of the game for us. And I think we finally have a group of property managers that, like you said, communication is key for me. I just want to hear back, you know, send them an email, or we have some that will text us back and forth. And I really appreciate that because before that, they weren't even, you know, we'd hear from them like once a week or something.
Ooh,
So that's
I don't
been
like that.
key. Yeah.
Hmm.
Um, I, where do you think, now that you're kind of diving back into real estate, like you said, and trying to get the excitement built back up to what it can do for you? I know you mentioned your job earlier, that that might be a little bit risky, um, but hopefully I won't force you to do something, you know, to go buy a bunch of stuff just trying to get out of your job. I had, again, I had a conversation with someone yesterday who, that for a long time, really didn't like their job at all and had gone through quite a bit recently. And after going through that, they were super thankful that they didn't quit their job, and they were just doing everything that they could to maybe increase their worth to their employer to try to build up a little bit more income and things like that. And Zuber, I think, put it very well, talking about not thinking about your job as a ball and chain, but as a key to what you want to get done in the future. So I try to look at it the same way. Even though I'm self-employed, I still need motivation to get out there every day and do it. In the near future, do you see yourself still looking for single family properties, or will you be looking for something like a duplex, triplex, or quad?
Yeah, I'm gonna go with whatever cash flows because I spent a lot of time just trying to make a duplex work in Rochester, and I was so uncomfortable with the areas I was looking at. I was so uncomfortable with the tenant turnover I was seeing. I didn't like seeing that one place would be listed for a couple months and then be gone, and then I'd see it back up a couple months later. I did not like seeing that. And there was a certain trend of neighborhoods that was in, and I was like, oh, and then I also saw that and just looking at like what was being listed for sale, that within like 5 years, like you'd have four different owners for some multi-units. And I was like, that's a sign that four different people tried this and did not make it work. So I will be looking for, you know, properties that have had one owner for 20 years. And of those 20 years, that owner did not live there. So, and in neighborhoods where people can find great tenants that want to stay, because one of our like highest costs is, you know, vacancies and turnovers. So I'm trying to just keep an open mind and then narrow things very, very specifically once I have an area with a great property manager, once I know exactly where I'll be going. Because I did have a goal for acquiring in 2025, one more. And then I kind of went back into the real estate world on YouTube and I was like, these people are getting amazing cash flows, and maybe I could find something like that in Rochester. I just don't know if it would still meet my comfort. And also maybe that's something I have to adjust within myself. Like I can take these certain risks. I am in a position where I do love my job. I don't want to quit anytime soon. However, my field will make me quit because the volatile is just it's all venture capital based. So when the market's not doing well, people make cuts. And there's just a lot of layoffs and restructurings. And that's the position I'm at. But because I've always been afraid of losing my job, that's been a constant fear since I've entered biotech. I've had those reserves. And I have also had that advantage of kind of having that like strong financial foundation because again, with being a cautious financial person, I've never gone to credit card debt. I pay that off like on a weekly basis. I don't have any student loans. Um, I paid for my car in cash. I don't have like any like tough economic things to cover every month. So that also helped like jump into the real estate game. But I could lose my job any second. So I keep a certain amount of, cash liquid for that. And then I even have a little more reserved that I keep in my Roth IRA for my cost basis that I can take out penalty free, tax free. So I have a short term and long term plan for being laid off. However, the second I am, I will be looking for another job. I don't expect for like real estate to become my W-2 anytime soon.
It sounds like you have some good safety nets, and that you're making some intelligent moves, planning. I know sometimes, like us, for example, we are building a reserve account for the properties, but then I hadn't really thought about an emergency fund for regular life, right? So that's something else that we started trying to build on as well. A lot of people don't think about that, and like you just mentioned, if something happened to your job and then you just say you lose a tenant or something and then you're paying that mortgage yourself, that's one thing. That's one thing that's appealing for a duplex or a little bit bigger units with, typically one unit can pay the mortgage at least while you're trying to get the other unit filled and things like that. I think moving forward, we've had a discussion too in the group about some of these other markets that you mentioned and how low the barrier to entry is. For example, we bought one place in St. Louis that was 70,000, right? So when we were all in, and we did get a loan on that one, when we were all in, it was about $15,000, right? Closing costs, down payment, everything. And sometimes maybe that's not a bad experiment because if you lose 15,000, it's a lot better than, getting in on a property for 100,000 and then losing it. So, and then you can test the market out. You can test your property managers out and see if you want to build a little bit more in that area. Maybe switch from a single family and move up a little bit. I know the markets vary, right? In some markets where single families really work well, and like you mentioned, duplexes might not, or threes or fours might not. And then it's reversed in some other areas where single families don't work. Um, so those are a lot of things that we learn after the fact, or like you'll learn it doing your research in the different markets. So I'm definitely excited about your level of research, and again, learning from you guys. We've only been back in it about 4 years, but we're still learning. There's so much to learn. And I think just being able to be here with you for this short time today, I think we're going to have to continue these episodes with you because you have so much knowledge already and great information to share with everybody. What do you think about? Have you been able to make all the meetings at while they're live, or have you had to watch them after the fact?
Yeah. The ones I've gone to, I've been able to make live. Yeah. And I've really liked the level of discussion. The one I went to on Friday, Vincent Harris was leading that one, and there was just a really great range of different topics. And towards the end, we were talking about a lot of the nitty-gritty about private lending. And he even gave us like one of his like private lenders, um, basically like their contact information and like a whole bunch of different materials that they'd given him. So I've already seen like a pretty sweet return from actually engaging with the real estate community. And before private lending, I had heard about it a lot, especially looking at like April Crossley's videos. However, I don't know why I just thought that it's something that you did if you knew a lot of rich people. And I'm realizing that that's not exactly the case. And also, now I do know some rich people. So, you know, why not?
Excuse me. When you talk about private lending, do you mean borrowing from private lenders or actually becoming a private lender yourself?
Now that I heard they get 12% without doing anything, that is tempting. That is tempting. However, I still have my financial plan and I don't want to be distracted from my plan. And that plan will give me excellent returns in people freedom, time freedom, being secure about losing my job potentially with whatever happens in the world. So that I need to stay the course. But I like really, as soon as Vincent mentioned that this man gets $450 a month on the dot, and then he gets a big hunk money when you do that after repair value, and he's making 12% interest. I was like, what is this magic? So yeah, for future, after I have my portfolio set up, definitely, definitely, definitely.
Yeah, I think that's a great option. And that's really passive, right? We have a couple of friends in the group who have lent money out. Um, and I don't know, we've also talked about that where just being in this community, it seems like everybody is trustworthy. Like I have friends in the group now, if they called me up and I had 50,000 and they needed it, sure, you know,
Yeah,
here you go. But you don't see that too much out in the real world. Everybody else is just after what they want and they'll do whatever they need to do to get it. So the people in the group are really special. And you mentioned too the any accountability group. And I think about that with ours on Wednesday because like I said, we're not super experienced ourselves, but the people that join, there's such a wide range of experience and doing different things, different um, strategies and things like that. So hopefully you don't get distracted by that because there's all these people, that seem like they're making money doing different things and you just need to stay true to what you're doing. But I really appreciate everybody jumping in and it's made it well worth the time. We've been doing it for a little over a year and a half now. And sometimes we get off topic, right? But sometimes that's what people need. They just want someplace to come and talk safely and they appreciate that. So I don't mind. I'll try to keep things on topic, but sometimes if you just get that feeling like somebody just needs to vent or somebody just needs to talk about, well, maybe find out some different information. A couple of weeks ago, one of our friends shared that he was just diagnosed with diabetes, and I've been diabetic forever. There's a couple other people in the group that are. So even those kinds of things, helping them kind of navigate those feelings in the beginning because I know I was not in a great place when I first learned that I was. So again, not to get too far off topic, but those things are okay too. And like you experience, you can jump in and jump out. If you only have half an hour or whatever, ask your question, and that's fine. We don't mean to hold everybody there for the full 3 hours that we do a lot of times. So again, thank you for jumping in, and thank you for sharing everything that you have today. But I'm serious. We're going to have another session because I can see you doing a lot of great things. Um,
Assigning more people homework, do your doomsday scenarios, write down your spreadsheets. Yeah, I feel like more spreadsheets would really help the world. Mhm.
yeah, I know we have a few people in the group that really go deep into their spreadsheets and they're willing to share them. You know, I've gotten a couple from some of our other investor friends, and that I think you bring up a great point. For you now, you have the one property. If you get all that stuff documented now, it's going to be a lot easier than if you get 10 and try to do it after the fact. So stay organized as you go. I know I've had a little bit of trouble with that myself, but so yeah, I'm looking forward to seeing you out there through the weekend at some of the other calls, and especially to come back on our call on Wednesdays
Yeah,
and
definitely.
participate. Yeah, I appreciate it.
I will absolutely be back.
Great. Thank you for your time today, and I'll chat with you soon.